afternoon. My name is Taylor Jordan.
And I'm Grace Daly.
And we're reporting on the developments in Venezuela's dollar allocation system.
Now, Venezuela already has two different dollar allocation systems, plus a black market. Both systems are a fixed exchange rate pegged to the US dollar. The first rate in the dual rate system is offered for preferential goods such as food and medicines. This rate is at 6.3 bolivar per dollar, and the second rate, commonly called the SACAD rate, is less favorable at 11.4 bolivar per dollar. The SACAD rate is used for expenditures on foreign travel, incoming foreign investment, and remittances.
I heard the new president, Nicolas Maduro, is introducing a third exchange rate, which would be called the SACAD 2. The existing two exchange rates are monitored and set by the central bank, but SACAD 2 would offer individuals and businesses the opportunity to buy and sell dollars independent of the central bank.
Currently, there is an unofficial third exchange rate as well. This is the black market for dollars, which operates at a rate of 87 bolivar per dollar. This graph illustrates the volatility of the value of the bolivar on the black market as compared to the fixed exchange rates of the other two systems. The graph shows the CIPME exchange rate, which was recently eliminated and replaced by SACAD. The two inclines along the purple line represent the 2 times the bolivar has been devalued over the past couple of years. Those who are not eligible to participate in the SACAD auction for dollars, as determined by the Venezuelan government, may turn to the black market to purchase the scarce US dollars. Some people have cheap access to American dollars and decide to sell them on the black market to turn a quick profit instead of importing goods with those dollars.
The popularity of the black market affects the country's balance of trade because the dollars on the black market are not being used to import foreign goods. This creates a shortage of goods as demonstrated by the scarcity index, which is at an all-time high of 28%. The scarcity index measures the unavailability of goods in stores. The scarcity of goods has contributed to the hyperinflation that Venezuela is now experiencing. Inflation in January alone was 3.3% and was at 56.3% annually for 2012. What is the government doing to combat such high inflation rates?
Well, last year, the bolivar was devalued from 4.3 bolivar per dollar to 6.3, a devaluation of 32%. This made exports cheaper to foreign countries, making Venezuelan oil especially desirable. The government had hoped to increase the supply of US dollars without floating their currency in this way. The devaluation resulted in the high levels of inflation, which we have already mentioned. President Maduro hopes that with the introduction of SACAD 2, more dollars can be traded off the black market, but without the stringent regulations participants must meet to participate in the original SACAD auctions.
With greater access to American dollars, the hope is that individuals and businesses will import more foreign goods, which would reduce scarcity and slow inflation. Now we have some questions for the viewers back home. Do you think the introduction of a third currency exchange system, like SACAD 2, will detract from the popularity of the exchange of dollars on the black market? Do you think that SACAD 2 will be effective in slowing Venezuela's hyperinflation and reducing scarcity levels? Why do you think the Venezuelan government chose to implement 3 currency exchange systems instead of flowing their currency?